students, welcome you all once again in the last session. I mean to say last standard of Ind AS of your FR paper, right? Which is Ind AS 101, first time adoption of Ind AS. I hope I am audible. Yeah. So students, today's topic is Indian Accounting Standard 101, which is a very unique standard, which is a very unique topic, right? We haven't seen such kind of standard in accounting standard. And the name or title of the standard is first time adoption of Ind AS. It means this standard is applicable. As the title suggests, this standard is applicable when entities are adopting Ind AS for the first time, right? So can anyone tell me, being the first standard, so how many standards are there? How many standards are notified as on date in terms of Ind AS? In terms of Ind AS, total 39 standards are notified as on date, right? So we have two series of Ind AS standard. First, a series starting from Ind AS 1, Ind AS 1 to Ind AS 41, right? Ind AS 1 to Ind AS 41. Second, the series starting from Ind AS 101 to the last standard Ind AS 116. So we have two set of standard, I mean to say two series of standard, 1 to 41 and 101 to Ind AS 116, right? And we are aware that how this series was drafted, how this series was finalized. So basically Ind AS 1 to Ind AS 41 is the counterpart standard of IAS, International Accounting Standard, and Ind AS 101 to Ind AS 116 is the counterpart of IFRS, right? So in Ind AS 101 to Ind AS 116, we have 16 standard, and in Ind AS 1 to Ind AS 41, we have 23 standard, right? We have 23 standard. So this is how we have total 39 standard. So now, either Ind AS 1 is the first standard, or if you will see, Ind AS 101 is the first standard. So even being a first standard, why Ind AS 101 has been taken care of at the last or at the completion, after the completion of all the standards, all the sessions? Why? Please let me know. Please tell me. Anyone who can tell me? Okay. So Rahul has replied that, sir, Ind AS 101 talks about first time adoption of Ind AS, right? So before understanding Ind AS 101, we need to understand other standards. Very good, Rahul. Very good. Yes. Ind AS 101 does not tell you the recognition criteria, measurement criteria. For example, if a company is applying Ind AS, how this deferred tax asset has to be calculated. Ind AS 101 will not tell you how the deferred tax asset has to be calculated. What is a deferred tax asset? At what value deferred tax asset or liability is going to be measured? Ind AS 101 will not tell you. Who will tell you? Ind AS 12 will tell you, right? Regarding this property, plant and equipment, what is a property, plant and equipment? What are the recognition criteria? What are the measurement criteria? This standard does not tell you. Who will tell you? Ind AS 16 will tell you. How this lease accounting has to happen, 101 will not tell you. Who will tell you? Ind AS 116. How this revenue accounting has to be done, right? That 5-step model, right? Your determination of transaction price, allocation of transaction price. So significant financing component. These things are taken care by Ind AS 115, respective standard, right? So friends, coming to the Ind AS 101, Ind AS 101 only talks about, it only facilitate when the entities are adopting Ind AS for the first time, right? For example, Reliance. So Reliance has adopted Ind AS from the financial year 16-17. 1617 was the year when Reliance has adopted Ind AS for the first time, right? Is it clear? Yes. And of course, if any company is adopting Ind AS, so that company has to publish the financial statement, that company has to prepare the financial statement for that year, right? But that year will not be the only year, because your financial statement is not only for the year, it contains some comparative information also. You all agree with me? Like Ind AS 1 says, Companies Act says that, Ind AS 101 says that if a company is preparing and presenting financial statement for a particular year, then at least 1 year comparative should be given, right? So Reliance has adopted Ind AS from 1617, that was the first year. And they have given comparative for 1516, right? So that was the comparative year, right? And they have given something else as well. I'll talk about that, right? But for the time being, we understand that we are having 39 standard. And why Ind AS 101 is the last standard? Ind AS 101 is the last standard because Ind AS 101 can be applied only after understanding all other standards, right? Because Ind AS 101 only talks about, it only facilitates the first time adoption of Ind AS. It only provide a bridge. It only provide a bridge between old GAAP financial statement, I mean to say previous GAAP financial statement, which is accounting standard financial statement, from accounting standard financial statement to Ind AS financial statement, right? So friends, this Ind AS 101 facilitates transition from accounting standard based financial statement to Ind AS based financial statement, right? Accounting standard based financial statement to Ind AS based financial statement. Who will facilitate? Ind AS 101 will facilitate the transition from AS to Ind AS, right? For the first time. Clear? So this standard provides some rules, provides some regulation, provides some assumptions, provides some relaxation, so that an entity can transit from accounting standard to Ind AS. Why this standard was important? This standard was very important because new GAAP means, so here old GAAP is known as AS, right? Accounting standard. Old GAAP means previous GAAP, and new GAAP is Ind AS, right? So whenever I am telling you that old GAAP, whenever I'm using the word old GAAP, previous GAAP, it is accounting standard. Whenever I'm using the word new GAAP, it is Ind AS. I hope it is clear to all of you. So friends, there is a general rule, not only in India, globally. What is the general rule? If any company, any entity has to transit from old GAAP to new GAAP, and this definition of old GAAP and new GAAP, AS and Ind AS is only from the Indian context, right? So if a company or an entity is moving from old GAAP to new GAAP, in that case, the company has to apply this new GAAP on a retrospective basis since beginning. Since beginning means since inception of the company or inception of the transaction. Sir, what does it mean? It means that, for example, Tata Steel Limited. You all have heard about Tata Steel, right? Tata Steel was incorporated in the year 1907. Tata Steel. It was incorporated in 1907, right? And we are so India, and we are kind of a country which were having our own set of accounting standard, right? So Tata Steel was preparing and presenting their financial statement under accounting standard, right? And from financial year 1617, first time they have moved from AS to Ind AS, right? So the company has purchased a land. The company has purchased a building, a land, a factory land, in, let's say, 1961. So the company has purchased land, building, factory land in 1961, right? So till 15-16, till financial year 2015-16, the company was preparing and publishing their financial statement under accounting standard, which is old GAAP. So friends, on these factory land, building, which accounting standard they were applying? Which accounting standard they were applying? For recognition, measurement, depreciation, then remeasurement, revaluation, cost model, which accounting standard they were applying? Which accounting standard they were applying? Yes, Ruchit, they were applying AS 10, right? Accounting standard 10. For this land building, they were applying accounting standard 10, right? Which is again a fixed asset related standard, PP standard. Now they are moving from, it's an old company, and after 100 and let's say after 108 years, they are moving from old GAAP to new GAAP, right? And this fixed asset, this PP, they have acquired around 50-60 years back, right? And now they are applying Ind AS. So first time when they have moved from AS to Ind AS, what is the general rule? The general rule is to apply the provisions of new GAAP, apply the provision of new accounting standards since beginning. Beginning means either beginning of the company or inception of the transaction, whichever is later. For example, the company was incorporated in 1907, but if the fixed asset has not been purchased in 1907, then how can you apply AS 10? Am I right? So first time they have purchased, I'm just giving you a scenario, right? So let's say first time they have purchased fixed asset in 1961. So of course, this accounting standard 10 was started from 1961. That's all. So right. So if you will apply new GAAP, so this new Ind AS 16 on property, plant and equipment, you will apply from which date? 1907 or 1961? Of course, 1961, because it is a standard on a specific item. So what is the general rule? Again, the general rule is apply the provisions of new Ind AS or new GAAP right from beginning of the or inception of the company or inception of the transaction, whichever is later, right? Clear? Any doubt? So please write down in your class notes. Please write down. There are 39 standard, Ind AS 1 to Ind AS 41, 23, 101 to 116, 16 standard. Ind AS 101 provides a bridge between AS to Ind AS. It facilitates rules, regulations, relaxations, assumptions for moving from accounting standard financial statement to Ind AS financial statement, right? Ind AS 101 only provides the rules, regulation, assumptions, relaxation for the first time when entities are moving from AS to Ind AS. As per this standard, previous GAAP means accounting standard, new GAAP means Ind AS in the context of India, right? Sir, why this standard was not there in accounting standard? I mean to say, why such kind of standard was not there in AS? Like for PP, in accounting standard, AS 10 was there. For taxes, AS 22 was there. For intangible, 26 was there. So why such standard was not there in the set of AS? Tell me why it is. Tell me why it was not there. Yes, Koshiki, you are right, because there was no transition, right? So we have not moved from some old to new AS, right? Earlier. So first time, whatever we have implemented accounting standard as a rule, right? So we have not shifted from some erstwhile standard to accounting standard. Accounting standard was the only one and only the first standard, right, in India. But now after such a long years, we are moving from, or we have moved from AS to Ind AS, and that is why this transition related standard was required or is required, right? So that is the one. Sir, we understood that in AS there is no standard. In Ind AS, it is Ind AS 101. So we understood that this is the situation. In globally, if I am a GFRS student as well, so globally, is there any counterpart standard? Of course, yes. Which is that standard? Which is that standard, guys? Tell me which is that standard. IFRS 1. IFRS 1 is under IFRS, right? In IFRS, it is IFRS 1. Okay. In AS, no such kind of standard is there. In IFRS, it is IFRS 1. Clear? I hope it is clear to all of you. I move forward. Shall I move forward? Let's share my Excel file and then I'll discuss more and more concept here. I hope my Excel file is visible to all of you. Please let me know if it is visible. Yes, friends, if I talk about IFRS, so global standard in IFRS, so basically it is globally. In IFRS, it is IFRS 1. In Indian context, in India, in AS, there is no such standard. No such standard was required. If I talk about again India under Ind AS, so we are discussing, we are studying Ind AS 101. Right? Ind AS 101. I hope this is clear to all of you now. Okay. Friends, before discussing Ind AS 101 and why Ind AS 101 has taken care at the last, you all have understood. And let me tell you, Ind AS 101 is kind of a standard which has been used or which will be used. Ind AS 101 is required only. Ind AS 101 is required only for the first time, in the first time and the last time in the lifetime of the company. What is the meaning of this line? What is the meaning of this statement? What is the meaning of this statement? Ind AS 101 is required only for the first time and the last time in the lifetime of the company. What is the meaning of this statement? Guys, whether my audio, video, everything is clear, whether the Excel file is visible, A and B column is visible, because one of the participant is saying it is not visible. Yes, Soham, you are right. It means it won't be applicable further once transition is complete, right? So Ind AS 101 is only required when for the first time entity is applying or moving from AS to Ind AS. Ind AS 101 is a transition related standard. Ind AS 101 is a transition related standard. Transition related standard, right? And it is required only when for the first time entity is moving from AS to Ind AS, right? Very good. Now quickly we will revise the implementation roadmap. right? For example, tomorrow you will appear in the interview, right? After qualification of CA examinations. So interviewer will ask that in my company, so you came for the interview in my company, and tell me in my company why Ind AS is applicable. In India, two set of accounting standards are there. Am I right? In India, there are two set of accounting standard for companies. One is AS, another one is Ind AS, right? So interviewer will ask why Ind AS is applicable to this company. Tell me. So first of all, you should understand the implementation roadmap, right? Which I have already taken with all of you, which as a first session or as a first day, right? So implementation roadmap. Let's discuss the applicability of Ind AS quickly, right? Then we will move further. So for every transition, and I am talking more practical here, right? If I only talk about Ind AS 101, of course, this implementation roadmap will not come as a standard, right? But when you are doing Ind AS assignment for the first time, or you are joining a company where Ind AS will be applicable, or you are appearing for an interview, the first thing which you need to take into consideration is implementation roadmap, that on this client, on this company, right, Ind AS is applicable or was applicable or will be applicable from which date, right? First of all, let's discuss the implementation roadmap. Implementation roadmap, which is also known as applicability of Ind AS, right? Applicability of Ind AS on companies, on Indian companies, right? First of all, Ind AS is applicable to which set of companies? I'm talking about today's applicability, right? So in India, Ind AS were notified. Ind AS were notified wide. MCA notification dated 16th February 2015. On 16th February 2015, NCA has notified applicability criteria or implementation roadmap for Indian companies, right? Clear? On 16th February 2015, MCA notified Ind AS, and also provide applicability criteria for companies other than NBFC companies, okay, other than NBFC companies. Again, the second notification, MCA notification dated 30th March 2016. 30th March 2016. MCA notification dated 30th March 2016. MCA on this date, MCA notified applicability criteria for NBFC companies, right? Is it clear? These were the two notifications which are important to see, which are important to learn, which are important to remember, right? From the interview perspective or from the real life perspective, right? Because otherwise, from where you will refer that Ind AS is applicable to a particular set of entities from which date, right? So these are the two important notifications provided by Ministry of Corporate Affairs. Clear? Okay. Friends, I hope my Excel file, all the columns are visible properly. Please let me know if there is any issue. My audio and video is clear. I would request from all the participants to please confirm, because there could be an issue from one or two at a level of one or two participant, but it should not be from all of you, right? So please confirm quickly. Okay, every column is visible now. Very good. Very good. Yeah. So let's quickly discuss that Ind AS is applicable on which set of companies. Ind AS is applicable on all listed companies. Applicability. I'm talking about as of now, right? I'm not talking about the history. Ind AS is applicable to all listed companies, right? All listed companies. Clear? Not applicable. Not applicable to whom? Not applicable to whom? If banks like HDFC Bank, IDFC Bank, Yes Bank, right? State Bank of India, these all are listed bank, right? And these are banks. So it doesn't matter. Banks are listed, unlisted, doesn't matter. On banks, Ind AS is not applicable because RBI has not clarified the applicability of Ind AS on banks, right? So on banks, Ind AS is not applicable. Clear? Ind AS is not applicable on bank. To insurance companies, sir. HDFC Life Insurance Company Limited, right? LIC of India is listed in this year. Sir, whether on these companies Ind AS is applicable, Ind AS is not applicable on these companies, right? So on banks, Ind AS is not applicable. On insurance company, Ind AS is not applicable. Sir, whether Ind AS is applicable to a company which is listed in the SME platform, small and medium enterprises platform, answer is no. Ind AS is not applicable on SME companies listed on SME platform, right? Have you understood that Ind AS is applicable to all listed companies, but it is not applicable to bank, insurance companies, and SME companies? So I would write this as a not applicable, or I would write this as an exception, right? Is it clear? Yeah. Okay. All listed companies, banks, insurance companies, SME companies. Okay. Sir, what about unlisted companies? Unlisted companies includes private limited companies, right? So we have not bifurcated between private limited and other than private limited, because unlisted could be public limited as well, right? A limited company which is not a private limited, it could be unlisted, right? So unlisted companies, Ind AS will be applicable only unlisted companies where net worth, NW means net worth is greater than and equal to 250 crores. 250 crores, right? So any company whose net worth either is equal to or greater than 250 crores, Ind AS will be applicable, right? Ind AS will be applicable. Clear? What is the exception in this case? There is no exception. Banks, insurance companies, and SME company doesn't matter. They are listed or unlisted. Ind AS is not applicable, right? So we can write like banks, insurance, and SME companies. If there is a bank, there is an insurance companies, there is a SME companies. Even though net worth is greater than 250 crore, Ind AS not applicable, right? Okay. Then same. All listed companies. So this was the notification dated 16 February 2015, right? This is as per notification dated 16 February 2015. Now there was another notification which says the same thing, 30th March 2016, which says the same thing. All listed NBFC companies, right? Or unlisted NBFC companies. Here the word categorically is NBFC. I'm not writing bank, insurance, SME, right? Unlisted NBFC companies. So on these companies, Ind AS is applicable, right? Is it clear? So these are the applicability criteria. Ind AS is applicable on these companies. It will be applicable to holding, subsidiary, associate, and JV of above companies, right? Ind AS will also be applicable to the holding, subsidiary, associate and JV of above companies. Okay. So now what other companies Ind AS will not be applicable? What are the other companies where Ind AS will not be applicable? Ind AS is not applicable to non-corporate entities, right? For example, the interviewer will ask you, right, or in the examination, the question will ask you, let's say just to check in GFRS paper, it could be in the multiple choice format, or let's say in FR paper, the interviewer will or examiner will ask you that ABC Limited has also invested in a partnership firm, right? And you are doing the Ind AS transition for the first time. So whether you will whether you will apply Ind AS 101 provisions and whether you will apply Ind AS provisions on ABC Limited as well as the partnership firm of ABC Limited also. So then you need to understand that on non-corporate entities, Ind AS is not applicable, right? Entity cannot apply Ind AS on proprietorship, partnership, LLP, Hindu undivided family, association of person, body of individuals. On these entities, Ind AS cannot be applied, right? Ind AS is not applicable to non-corporate entities. What else? What else? Bank, insurance companies, SME companies we have discussed. So Ind AS is not applicable to overseas entities. So you have written that if Ind AS is applicable to these companies, like all listed companies, unlisted NBFC greater than 250 crores, all listed NBFC, if Ind AS is applicable to these companies, it will be applicable to the holding, subsidiary, associate and JV of these companies as well, right? For example, Reliance is having a subsidiary in USA. So on that US subsidiary, because Reliance Ind AS is applicable. So whether on that US subsidiary Ind AS is also applicable, answer is no. The US entity will apply US GAAP, right? On US entity, Ind AS is not applicable, right? Is it clear? So non-corporate entities, overseas entities, Ind AS is not applicable. Bank, insurance, SME company, Ind AS is not applicable, right? Sir, can entity apply Ind AS voluntarily to any companies, right? So companies not covered in the exception, companies not covered in exception, Ind AS may be applied voluntarily. Okay. Ind AS may be applied voluntarily. Is it clear? When I'll share the Excel file with you, all of you, even I have beautifully summarized this in the table. All listed companies except SME listed companies, unlisted companies whose net worth is also is equal to greater than 250 crores, and the holding, subsidiary, associate and JV of such company, all listed NBFC not applicable to non-corporate, SME listed, insurance, banking companies whose net worth is less than 250 crores, overseas entities, right? But the companies where the net worth is less than 250 crore, I mean to say not covered in the exception, right? So Ind AS may be applied voluntarily. If the company wants to apply, they can apply, right? I hope it is clear to all of you, right, friends? Okay. ICI admin team, please confirm if you are also facing this audio and video issue. Please. Are you facing this audio and video issue? Yes. Now let's discuss further. So we have discussed the implementation roadmap. Now we will discuss the first time adoption steps, right? Why it is important to discuss, or why it is important to understand the first time adoption steps, right? Koshiki is asking, sir, unlisted NBFC whose net worth is less than 250 crore can also apply voluntarily. So Koshiki, unlisted NBFC whose net worth is less than 250 crore cannot apply voluntarily, right? Let me write in the chat box, in the Excel file itself. So let me write here. Unlisted NBFCs whose net worth is less than 250 crores may not apply voluntarily. But let me tell you, for example, let's discuss a situation. ABC NBFC Private Limited, right? Private Limited is having a net worth of 200 crores. It is a subsidiary of listed NBFC. It is a subsidiary of listed NBFC, that is, let's say ABC NBFC Limited, right? Advise applicability of Ind AS to both the companies. Right. So in this case, on ABC NBFC Limited, Ind AS is applicable, being a listed NBFC. But on ABC NBFC Private Limited, Ind AS is also applicable. Ind AS is applicable, being a subsidiary of an NBFC on which Ind AS is applicable, right? So being a subsidiary of NBFC in which Ind AS is applicable, on this private limited, Ind AS will also be applicable, right? It will be covered in this clause. Holding subsidiary associated in JV of the above companies, means this above NBFC, right? Okay. Is it clear? Yes, banks, insurance, non-corporate overseas also cannot apply voluntarily. Yes, now let's discuss first time adoption steps. In first time adoption steps, why it is important to understand first time adoption steps, right? Friends, if I talk about first time adoption steps, and let me tell you, this Ind AS transition has a big impact, right? If I talk about some of the big companies, Maruti Suzuki India Limited, when they implemented Ind AS for the first time, right, they had an impact of 1,718 crores. 1,718 crores in their reserves. Their reserves increased by 1,718 crores. When Reliance Industries had implemented Ind AS, their reserves increased by 16,568 crores. Right. When Infosys implemented Ind AS, the reserve of Infosys had increased by close to 4,000 crores. When Hindustan Unilever implemented Ind AS, their reserves increased by 2,419 crores. When Airtel implemented Ind AS, their reserves increased by 27,465 crores. So I have given you the data of these 5 companies, right? And for the same period of time, when they prepared their accounting standard financial statement, and for the same period when they had prepared Ind AS financial statement for the same date, their reserves have increased by such thousands and thousands of crores. Why? It is just because of the different rules of Indian accounting standard, right? The very simplest and very, very visible rule I can tell you, the different provision. You all are aware about accounting standard 13, AS 13, you all are aware about, right? AS 13, accounting standard 13. AS 13 says that it's a accounting for investment standard, and AS 13 says that there are two kind of investment, right? Current investment and long-term investment, right? What is the rule for measurement for current investment? Current investment has to be measured at what? Measured at cost or market value, whichever is lower. Long-term investment measured at cost less provision for diminution if permanent, right? Other than temporary or permanent. This is the rule for AS 13. What is the rule for Ind AS 109? For example, it is an equity investment or mutual fund. It doesn't matter current or long term, it has to be measured at fair value. Right? This is the rule. This is the rule, right? Any doubt in this rule? Okay. In this case, there was a company, Bharti Infratel Limited. And Bharti Infratel Limited implemented Ind AS from financial year 16-17. Comparative is financial year 15-16. Transition date is 1st April 15. I'll discuss that. When Bharti Infratel implemented Ind AS, right? So they have an investment of 6,000 crore of cost. So cost of investment was 6,000 crores, right? And market value of such investment was 6,741 crores. 6,741 crores. Accounting standard was only talking about the downside, measured at cost or market value, whichever is lower. If market value is higher, by default cost will be lower. So it is by default at cost. If market value goes decline, it will be at market value, right? If it is a long-term investment, it has to be at cost. So there is no way where under accounting standard, a company can recognize investment at a higher value, right? But under Ind AS, the company has to measure such equity investment, right, on market value, on fair value, and fair value could be higher, could be lower. So in 90% of the listed companies in India, when they implemented Ind AS, one of the biggest transition difference was accounting of investment. Why it was one of the biggest difference? It was one of the biggest difference because of the different provisions under accounting standard and Ind AS with respect to measurement of investment, right? So this difference was there in every company. Is it clear? Okay. Now Sumit is asking, sir, if bank is a subsidiary of a normal company or of a NBFC, then what happens? Sumit, if bank is a subsidiary of NBFC company, in that case, Ind AS will not be applicable for bank for the regulatory purposes, for the statutory purposes, but this bank will prepare Ind AS account for the purpose of consolidation of the parent company. I can show you the real life example. Friends, HDFC Limited is an NBFC, right? There are two companies, HDFC Limited and HDFC Bank Limited. So HDFC Limited is the NBFC company and HDFC Bank is an associate of HDFC, right? HDFC Bank is an associate of HDFC. Means HDFC Limited is the investor and HDFC Bank is an associate company. Means when HDFC Limited will prepare their consolidated accounts, they have to consolidate HDFC Bank also. But the irony is HDFC Limited being a listed NBFC, HDFC Limited is applying Ind AS, right? This HDFC Limited is applying Ind AS because it's a NBFC. But on HDFC Bank, Ind AS is not applicable, AS is applicable, right? So how this HDFC Bank is preparing or doing with their financial statement, let's discuss. This is what I have extracted from the notes to the consolidated financial statement of HDFC, which is having a banking associate HDFC Bank, right? And this is from their annual report 2021. See what they have written in the notes to accounts of HDFC Limited, not bank, HDFC Limited, right? HDFC Bank Limited, for the purpose of its statutory compliance, prepare and present, I am talking about bank, prepare and present its financial statement results under the historical cost convention and accrual basis of accounting in accordance with Indian GAAP. Indian GAAP means accounting standard, right? Is specified under section 133 of Companies Act 2013, read together with relevant rules in so far as they apply to banks. These financial statement or results are largely referred to as the Indian GAAP financial statement, right? So in the first paragraph, if you will read, it is written that this HDFC Bank has prepared their financial statement as per Indian GAAP, which is accounting standard. Now in the second paragraph, they have written HDFC Bank being an associate of HDFC Limited, which is known as the corporation, right? So HDFC Bank being an associate of HDFC Limited has prepared this consolidated financial information, which is fit for consolidation information in accordance with Ind AS for the purpose of preparing the consolidated financial statement or result of HDFC Limited. So if you will see this list, this note from the notes to accounts of a listed company, which is a listed NBFC, HDFC Limited, they have written that our associate bank has prepared as per IGAAP for the statutory purposes. But for our consolidation purposes, this bank has prepared fit for consolidation information or fit for consolidation financial statement as per Ind AS, right? I hope it is clear to all of you. Is it clear? Not clear? Tell me, friends, is it clear or not clear? Very good. Sumit, I hope I have answered your question practically. This Ind AS 101 is a very practical standard. We have discussed implementation roadmap, right? Let's discuss the first time adoption steps. Let's discuss the first time adoption steps, okay? First time adoption steps. Yes, I have practically applied this standard and I have seen the transition of Ind AS for 14 to 15 companies, right? And I'll share with my practical experience as well, right? So whatever examples I'm taking, these all from the practical experience. First time adoption steps. I've given you the impact in the financial statement of 5 companies, right? Like Reliance, Maruti, Infosys, Bharti Airtel, Hindustan Unilever, right? So friends, these companies were having big impacts from moving from AS to Ind AS. Now the question arises, if you have to move from AS to Ind AS either in the examination paper or in the real life or practical life, what should be your approach? So with my experience, I have bifurcated this entire Ind AS transition into 5 steps, right? What is the first step? The first step is step number 1. Please write down. Step number 1. Step number 1. Identify the date of transition. Identification of date of transition. What is meant by date of transition? What is meant by date of transition? And what is the concept? What is the concept of transition date? Let's discuss this question. Okay. To understand the concept of transition date. ABC Private Limited crossed net worth of 50 crore as at 31st March 2019. Advise applicability of Ind AS and transition date. This is a private limited company and the net worth has been crossed 250 crores on 31st March 2019. So tell me, Ind AS is applicable from which year? Ind AS is applicable from 1819 or 1920? So Ind AS will be applicable from which year? Tell me. Of course, from the next year, right? Because you have to look at the audited. Yes, Viraj, I have discussed this roadmap in the first lecture on 14th October. You are right. So, Koshiki, it is not from 1819. It is from 1920, right? It is from 1920. In this case, till FY 1819, the company has prepared, financial statement as per accounting standard, as per AS, right? As per AS. When they prepare as per AS, and once under AS financial statement, if the net worth become equal to or crosses 250 crores, then Ind AS will be applicable immediately from the next year. Okay. So till FY 1819, the company has prepared financial statement as per accounting standard, right? Ind AS is applicable from FY 1920. Okay. Now the question arises. Understood. Let's discuss. 1920 is the year when the company will adopt Ind AS. 1920 is the year when Ind AS will be applicable to the company. What is the adoption date? What is the adoption date? What is the adoption date? Adoption date of Ind AS. Ind AS will be adopted. The accounting will start from 1st April 2019, right? What is the adoption year? Adoption year will be 2019-20. Is it clear? Sir, how much period of financial statement needs to be prepared in this case? 2019-20 financial statement should be at Ind AS, right? But when you prepare 2019-20 financial statement, of course, you will prepare balance sheet as a 31st March 20, right? In that case, you have to, this 1920 is the current year, right? Don't you think that comparative numbers are also required to be given? Comparative financial statements are also required. Comparative year. What will be the comparative year? 2018-19. 2018-19 is the comparative year. This year financial statement is already prepared as per accounting standard. For this year, financial statement has to be restated financial statement as per Ind AS. Right? The current year, the company is adopting Ind AS. Current year, the financial statement will be fixed financial statement, right? Because on 1st April 2019, the company has decided, or the company was required to apply Ind AS financial statement, right? Required to apply Ind AS. But since 1819 was already published, okay, and 1819 was as per AS, so for the sake of comparative information, the company has to restate the comparative period financial statement as per Ind AS. I hope it is clear to all of you. भाई एक साल का कंपैरेटिव तो हमें देना होगा ना, एक साल का तो कंपैरेटिव वी हैव टू गिव, राइट? ओके, नाउ फ्रेंड्स टेल मी वन थिंग. If Tata Steel Limited has purchased a building in the year 1961, whether that building will come in the balance sheet of 1920 also, if that building has not been sold out or not been de-recognized, whether that 1961 building, 1961 land will come in the balance sheet of Tata Steel in the year 1920 also, 1819 also, 1718 also? Yes or no? Yes, of course. Yes, of course. Because it's a balance sheet item and balance sheet numbers are carried forward, right? Handle number are not carried forward, balance sheet numbers are carried forward, right? You are not carrying forward your income, you are not carrying forward your expenses. You are only carrying forward your asset, liabilities, reserves, right? Clear? If there is an inventory, there is a stock, you need to carry forward the value of that stock. So friends, tell me one thing. If you have to apply Ind AS from 1920, what does it mean? It means the entire accounting, the entire numbers of 1920 should be as per Ind AS, as per the regulation, as per the provision of Ind AS. Comparative is 1819. So again, the comparative number should be as per Ind AS, means you have to apply the provision of Ind AS for finalizing the number of 1819, right? Now tell me one thing. If you have to restate 2018-19 numbers as per Ind AS, don't you think you have to convert your opening number also as per Ind AS? You have to convert your opening number also as per Ind AS, right? For example, in 1920 there is an inventory. For example, in 1920 there is an inventory, right? In the 1920, let's say if I talk about 1920, how this 1920 inventory will be, inventory balance will come. For 1920, opening balance will be there, then movement during the year, then closing balance, right? Closing balance. Example, let's talk about 1920. If I talk about inventory balance of 1920, it is inventory balance. Inventory is a balance sheet item. It's a balance sheet item. Okay. For 1920, what is the opening balance on which date? 1st April 19, right? Movement is for the year which is 1920, and closing balance should be on 31st March 20, right? Clear? These three dates will be there, na? These three dates will be there. Now let's say the opening balance on 1st April 19. So let's keep it here only. Opening balance was 100 rupees. Movement means purchase and sale is, let's say, 20 rupees. The closing balance is 100 plus 20. Right. So now let's come to 1819. We have restated 1819 financials also. For 1819, the opening balance is 1st April 18. Movement is 1819. Closing balance is 31st March 2019. Right. So let's say this is 100, and let's say this number is, let's say, 30, right? Movement. So this should be 70. But friends, if you have to restate the current, if you have to prepare the current year financial statement as per Ind AS, so opening balance of current year needs to be converted as per Ind AS. Okay, so no problem. You have to restate comparative also. So when you restate the closing balance of comparative, it will become opening of the current year. But friends, the problem is this number, 1st April 2018 number, right? This number is as per accounting standard. So don't you think if you have to restate the comparative number, you have to correct the opening balances as per Ind AS also? You have to restate the opening balance as per Ind AS also. So, and this is how the balance sheet needs to be prepared at the time of first time adoption of Ind AS, right? Like in this case, the current year balance sheet is 31st March 2020. The previous year balance sheet is 31st March 2019, and the opening of the comparative year is 1st April 2018. These three balance sheet needs to be prepared. This is known as a transition date. This is known as a transition date. Why? In this on this transition date, restatement is required. The number is required to be restated as per Ind AS. Restatement as per Ind AS, right? Only opening balance, only third balance sheet is required to be given, required to be restated as per Ind AS, right? Otherwise, the entire third financial statement is not required. Whether the third P&L is required, whether the transition date P&L is required, answer is no. P&L, cash flow, these are the for the period ended number. These are not as on date number, right? Tata Steel last year P&L will not become the opening P&L, right? Is it clear? I hope this is clear to all of you, friends. I hope this is clear to all of you. What is the concept of transition date? What is the concept of transition date? This transition date is starting date under Ind AS. This is starting date under Ind AS. Okay. This is also known as a starting date under Ind AS. Clear? Is it clear? So here restate as per Ind AS. Here restate the opening balance as per Ind AS. Okay. Here financial statement restatement is required. On transition date only opening balance restatement is required. First time adoption, the third balance sheet requirement is as per Ind AS 101 only, which is the transition date balance sheet. Let me show you the Reliance Industries financial statement. Please let me know if the Reliance Industries financial statement is visible. Please let me know if it is visible. I hope the Reliance Industries annual report is visible. Is it visible? You can see that in case of Reliance Industries Limited, Just a minute. You can see that in case of Reliance Industries, this is annual report for the year 16-17, right? This is annual report for the year 16-17. So they have implemented Ind AS from 16-17. Okay. Now let's go to their balance sheet. First of all, let me show you one of the notes, then I'll come to the balance sheet. Yes. Please read this note. Basis of preparation and presentation. Read the note from this para. Up to the year ended 31st March 2016, the company has prepared its financial statement in accordance with the requirement of Indian GAAP, Indian Generally Accepted Accounting Principle, which includes standard notified under the company's AS rules and considered as previous GAAP. So they have written that up to 31st March 15-16 means for the last year 15-16, they have prepared their financial statement under IGAP. But from 16-17, they are moving to Ind AS. These financial statement, which 16-17 are the company's first Ind AS standalone financial statement. So this is the financial statement which I am showing you. It is standalone. In the consolidated, they have written these financial statement are the company's first Ind AS consolidated financial statement, right? Clear? So up to 31st March 16, they have prepared under IGAP AS. So let's see their balance sheet. When you look at their balance sheet, of course, for the current year, which is 16-17, they have given the balance sheet of 31st March 17. 1 year comparative is also required. So they have given the balance sheet of 15-16, which is 31st March 16. And they have also given the third balance sheet, opening balance sheet of the comparative year. So if the comparative year is 15-16, what is the opening balance sheet? 1st April 2015. This is the opening date. So they have given the third balance sheet, which is 1st April 15 balance sheet, right? Clear? Okay. So now they have also given the statement of P&L, and you can see that the P&L is only for the current year, for the comparative year, right? They have given the statement of changes in equity, and statement of changes in equity is also for the year ended, right? It is not as it. So they have given the statement of changes in equity for 2 years only, right? If I talk about cash flow, the cash flow they have also given for 2 years. The cash flow is also for the period ended, right? So have you understood the meaning of transition date? I hope you have understood the meaning of transition date, friends. Yeah. So transition date is the opening date of the Ind AS transition. Transition date is the opening date from where the company starts moving to Ind AS. Like all the big listed companies of India, which are BSE listed or NSE listed, right? Nifty based or BSE based companies. These companies have implemented Ind AS from 1st April 2015, being a transition date. Comparative date 15-16 and 16-17 is the adoption year where the actual Ind AS financial statement was started, right? I hope you guys are clear about this concept. Yes or no? Are you clear about this concept? Yes. Friends, comparative year, adoption year, transition date, whether these concepts are clear to all of you? Should I repeat again? Should I take more example? Yeah. So adoption year is the year from where the actual Ind AS reporting will start. For example, I have shown you the Reliance Industries annual report, right? The annual report was for the year 16-17, and they have written that up to 15-16, up to March 16, we have prepared our accounts as per IGAP. But from this year, we are preparing as per Ind AS, right? So what is the current year? The current year was 16-17. So what is the comparative year? 15-16. What is the opening date of the comparative? 1st April 15, right? Since balance sheet numbers are carried forward, if you have purchased a truck 7 years ago, that truck will come in your current year balance sheet as well. But if you have booked a salary expense last year, that salary expense will not come in the current year, right? Right? Okay. So this is the concept of transition date. Why the concept of transition date is very, 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 very important. The concept of transition date is important because this standard Ind AS 101 will be applicable on the transition date, right? Please remember and please write down. Please remember and please write down. In the same example, 1st April 2018, in my example, above example, 1st April 18, right, which is a transition date. And 18-19, previous year. 19-20, current year. Ind AS 101, exemptions and relaxations are applicable on this date. 18-19, no relaxation. 19 to no relaxations. All the provisions of Ind AS are applicable. No exemption or relaxation of Ind AS except unless specified. Same here also. Your Ind AS 101 provision is applicable on the transition date only. We will discuss that what is given in Ind AS 101 and it is applicable on the transition date only, right? Is it clear? On 2018, I mean to say comparative date, current year, all all the relevant provisions of Ind AS is applicable. Right? Is it clear? It's 8:15 now. Let's have a 10 minutes break and I'll start after the break. I'll start at 8:25. Okay. the concept of the transition date, right? So now let's discuss what are the deliverables in the first Ind AS financial statement. So we know the deliverables in the financial statement, in the Ind AS financial statement. So what are the component of financial statement? If I talk about accounting standard, balance sheet is there, cash flow is there, P&L is there, and notes to accounts. But in Ind AS, there are 5 components to the financial statement, right? One is balance sheet, P&L, statement of changes in equity, cash flow statement, and notes to accounts. Right? So friends, just give me a minute. Viraj is asking a question, sir, how to apply applicability of Ind AS when there is a difference in is net worth and market valuation. If net worth as per books is higher than market value and vis-a-vis. So Viraj, first of all, market valuation does not make any. Market valuation is not applicable and does not make any difference as far as net worth is concerned, right? Because for calculating net worth, you have to see the audited financial statement of IGAAP, first of all, right? And as per the audited IGAAP financial statement, you have to apply the definition of net worth given in the Companies Act, which is as per section 2 subsection 57 of the Companies Act, right? So you have to apply the definition of net worth as per section 2 subsection 57 of the Companies Act on the basis of audited IGAAP financial statement. Koshiki is saying statement of changes in equity also have opening balances. Yes, Koshiki, it has opening balances, but statement of changes in equity is the for the year ended number, right? For the year ended number. So what I was trying to say like balance sheet is as on date number. So there are 3 balance sheet columns, right? But the P&L, cash flow, and statement of changes in equity is not a 3 period numbers, right? It's only 2 period number. Okay. I hope it is clear to you, Viraj. I hope it is clear. Is it clear, Viraj? Okay. Yeah. Okay. I am facing some problem in my Excel file. When I am sharing the screen, I'm not able to write down on the Excel file. Yes, now it is there. Yes. In this case, we are discussing what are the deliverables in the first Ind AS financial statement, right? We understood that in the first Ind AS financial statement, there are 3 balance sheet, there are 3 period financial statement, right? Balance sheet, first of all. Whether balance sheet is required for the current year, I'm taking the same example, 1920 current year, previous year 1819, first April 18 transition date. So whether balance sheet is required for current year, yes. Whether balance sheet is required for previous year, yes. Whether transition date is required, whether the balance sheet is required on transition date, of course, yes. This balance sheet number is as on date number, right? You can see that the balance sheet as on date. P&L, whether current year P&L is required, yes. Whether previous year P&L, yes. There is no transition date P&L, not applicable. Why? It is for the period ended. Statement of changes in equity. Current year, yes. Previous year, yes. Transition date not applicable. Why? Because this statement of changes in equity is also for the period ended. Cash flow statement, yes. For the current year, yes. For the previous year, but not applicable for the transition date because this cash flow is also for the period ended. Notes to account, yes. For the current year, yes. For the previous year. What about transition date? What about transition date? Tell me what about transition date? What about transition date? Notes to account only for balance sheet related item. Balance sheet related item, yes. Only balance sheet related item, right? Others, no. Is it clear? Not clear? Let me show you the Reliance Industries Limited annual report once again. Okay. So I have shown you that in Reliance Industries, the balance sheet was for 3 years, right? For 3 period. The balance sheet was there. P&L cash flow statement of changes in equity was only for 2 years. Now let's go to the balance sheet related notes. Okay. Let's go to the balance sheet related notes. This is accounting policy. After accounting policy, there will be a balance sheet related notes. So see, this is the non-current investment. This is an investment note, which is balance sheet note. And you can see there, 31st March 17, 31st March 16, and 1st April 2015. So they have given the note. They have given all the schedules relating to balance sheet for 3 years, right? Let me show you few more schedules. Other non-current asset, current year, previous year, transition date. Inventory is current year, previous year, transition date. Trade receivable, current year, previous year, transition date. Right? So all the balance sheet related notes are for 3 years, for 3 period. Let me show you the P&L related notes also. Since the P&L was for 2 period, so the P&L related notes are also for 2 period. Employee benefit expenses, current year, previous year only. Right? Is it clear? Is it clear to all of you? So we are discussing, after discussing the concept of transition date, why it is there, why it is important. So Ind AS 101 is applicable to which areas of, the first Ind AS financial statement. We are discussing deliverables in the first Ind AS financial statement, right? Right. Now, these 5 components will be there in every Ind AS financial statement for every year. The only difference is, in the first Ind AS financial statement, the third balance sheet will be there and the balance sheet related notes will be there. But there is one more difference. There is one more difference in the first Ind AS financial statement. Now, what is that difference? Friends, I'll give you the practical example here. Practical example, right? Let's say Viraj and Soham are the shareholder of Bharti Infratel Limited. This is a company, Bharti Infratel Limited, right? Viraj and Soham are the shareholder. Viraj is engineer and Soham is doctor. They all are non-commerce person, right? And they are the shareholder of Bharti Infratel since beginning. So when it got listed. This company has implemented Ind AS from FY 16-17. Okay. Which means FY 15-16. This company had prepared GAAP financial statement, AS financial statement, and this company was a debt company, and this company was having a lot of investments. Right? When this company implemented Ind AS for the first time, which was 16-17, this was the first year when they have implemented Ind AS, right? This was the first year. So comparative was the 15-16, right? And they have given the balance sheet of 1st April 2015 as well. And this 1st April 2015 balance sheet is nothing. It's a 31st March 15 balance sheet, roughly. What is 1st April 15? 1st April 15 is nothing. It's 31st March 15. 31st March 15 को रात को 12 बजे जो बैलेंस होगा वो 12:01 पे फर्स्ट का ओपनिंग बैलेंस बन जाएगा, राइट? You all understand this? Yeah, you all agree with this? First April is nothing. It's a 31st March 15 number, right? It's not like कि 1st April को रात का number है. There will not be any transaction included for the first. 12 midnight closing number should be the first midnight opening number, the first number. Okay, clear? So friends, Raj and Soham are the shareholder and they are the non-commerce person. The company has published their financial statement on Ind AS for the first time, right, in 1670. But for 15, 16 and 14, 15, I mean to say 31st March 15 and 31st March 16, the company has already prepared their financial statement as per GAAP. Now let me talk about some investment, right? This is a real life scenario. Investment. I have prepared the financial statement. I have done the Ind AS transition of this company. Let's talk about investment. On 1st April 2015 or on 31st March 2015, this company was having an investment of 6,000 crores cost. On 31st March 16, this company was having an investment of 6,000 crores, right? This company was having an investment of 6,000 crores. Now what happened? In IGAP, and these investments were long-term investment. And these investments were recognized, few were short-term, few were long-term. But these investments were recognized under accounting standard 13 as cost or market value, whichever is lower in case of current investment. In case of long-term investment, it is cost less provision for diminution if it is permanent. Now the market value on 31st March 2015, the market value of this investment, this was the cost. If I talk about fair value, market value of this investment, the market value was 6,741 crores on 31st March 2015. And the market value becomes 6,100 crores on 31st March 2016. 16 means 31st March 16, right? Balance sheet will always be as on date. And 1617 means 31st March 17, right? I am discussing deliverables, right? And I want an answer from all of you that what should be the additional deliverable for the first time Ind AS financial statement. When Soham and Viraj got these Ind AS accounts, these Ind AS accounts was for this 3 period, right? And these Ind AS accounts, when they got this Ind AS account, now these are this 1617 is the first number. This is the restated number. This is the restated number. And Soham and Viraj were not chartered accountant, they were engineer and doctor. They were surprised to see the number which is 6741 crores and 6100 crores. Right. Soham called Viraj. They are good friends, and Soham called Viraj. That Viraj, every year I'm getting the annual report of this company, right? And when I open the annual report of Bharti Infratel for 31st March 15, the number of the investment was 6,000 crore. And for the same date, which is roughly, which is 1st April 15. So 1st April 15 and 31st March 15 is the same date, right? The number becomes 6741 crore, which is 741 crore more than that number. Again, when I dig out 31st March 16 balance sheet, the number was 6,000 crores. But when I'm looking at this 1617 financial statement comparative number, it becomes 6,100 crores. So I'm not able to understand, for the same period, for the same date, the numbers are different. What was reported 1 year and 2 years earlier, and what is getting reported as on date. He is not able to understand. Even Soham is not able to understand. Viraj is not able to understand. And they were surprised to see the change number for the past periods. And friends, being a commerce student, being a chartered accountant, we understand that there is due to Ind AS. So even Soham and Viraj has seen that these numbers are as per Ind AS, but earlier somehow called some IGAP was applicable. But since they were doctor and engineer and they were not supposed to have a knowledge on Ind AS. So for a layman person, what do you think? What should have been provided so that he will be able to understand, okay, these are the IGAP number, these are the Ind AS number, and the difference is this one, right? And what is the reason for difference? So if this would have been given, probably their comfort will be much high. And forget about non-commerce person. Even for a commerce person, how will he be able to understand that yes, this gap is there between IGAP and Ind AS, and this is the reason for the gap? So don't you think for the past period some reconciliation needs to be given? Don't you think the past period some reconciliation needs to be given? Yes. In first Ind AS financial statement, the reconciliation, some reconciliation needs to be given. And what is that reconciliation? This is known as balance sheet or equity reconciliation, right? Balance sheet or equity reconciliation. So whether balance sheet or equity reconciliation is required for the current year, whether balance sheet or equity reconciliation is required for the current year? No. Why? There is no number which have been published in the past for the current year. Current year number is a fresh number. Soham and Viraj does not have any annual report from where they can compare the current year number. So of course not applicable. But what about 31st March 19? I mean to say previous year. Of course, yes. Because they can compare from the previous year annual report. What about transition date? Of course, yes. Right? P&L reconciliation. P&L or profit reconciliation. Whether P&L and profit reconciliation for current year is required, not required. Why? Because there is no past published number for the current year. But for previous year, of course, yes. Of course, yes. And for transition date, of course, not applicable. Since the P&L is not applicable, it is not applicable, right? Then cash flow reconciliation. Whether cash flow reconciliation for current year is allowed, is required, not applicable. For last year, yes. For transition date, not applicable. Right? I hope it is clear to all of you. I hope this reconciliation thing is clear to all of you. You remember I told you Reliance net worth, Reliance reserves have been increased by 16,000 crores on the transition date. Airtel reserves have been increased by 27,000 crores. So how come it got increased? Just because of these different provisions under Ind AS. You can see in Bharti Infratel Limited, the reserves have been increased by 741 crores on the transition date just due to this fair valuation, right? Just due to this fair valuation. Okay. Clear? I hope it is clear to all of you. Friends, just give me a minute. Yeah. So let me show you a practical aspect of this reconciliation as well. Balance sheet of Reliance Industries Limited shown you. They have given 3 balance sheets. P&L I have shown you. They have given 2 P&L. OC I have shown you, CFS I have shown you, notes to account I have shown you, right? Now let me show you the reconciliation. And please let me know if the Hindustan Unilever Limited first time reconciliation and disclosure is visible. Please let me know. Is it visible? Hindustan Unilever Limited. This is the extract from the annual report of Hindustan Unilever Limited for the financial year 16-17. Yeah. Let's go to transition to Ind AS, right? So they have given the first time adoption of Ind AS note they have given. First time adoption of Ind AS. The company has adopted Ind AS notified by the Ministry of Corporate Affairs with effect from 1st April 2016 with a transition date of 1st April 15. With effect from 1st April 16 means 1st April 16 is the adoption date, right? First year is 16-17, comparative year is 15-16, opening date is 1st April 15, which is a transition date. These financial statements for the year ended 31st March 17 are the first financial statement the company has prepared under Ind AS. For all period up to and including the year ended 31st March 16, the company prepared its financial statement in accordance with accounting standard notified under section 133 as per company's AS rules, right? The adoption of Ind AS has been carried out in accordance with Ind AS 101, first time adoption of Ind AS. Ind AS 101 requires that all Ind AS standard and interpretation that are issued and effective for the first Ind AS financial statement shall be applied retrospectively and consistently for all financial year presented. Accordingly, the company has prepared financial statement which comply with Ind AS for the year ended 31st March 17, read together with the comparative information as at and for the year ended 31st March 16 and the opening Ind AS balance sheet as at 1st April 15, which is the date of transition to Ind AS. Right? In preparing these Ind AS financial statement, the company has availed certain exemption and exceptions in accordance with Ind AS 101, which we will discuss later on, right? And let me show you the reconciliation now. Transition to Ind AS reconciliation. The following reconciliation provide the explanation and quantification of the differences arising from the transition from previous GAAP, which is AS, to Ind AS in accordance with Ind AS 101. And what they have given? A reconciliation of equity as on transition date. Reconciliation of equity as on comparative date 31st March 16. Equity means balance sheet. Reconciliation of P&L for the year ended 31st March 16. Adjustment to statement of cash flow for the year ended 31st March 16, right? So you can see that on 1st April 2015, they have given this entire balance sheet reconciliation. Previous GAAP, Ind AS adjustment, Ind AS numbers, right? And at various places there is a difference, okay? And you can see that they have explained this in the form of a note number, right? So this is entire balance sheet reconciliation on transition date. This is a balance sheet reconciliation on the comparative date. The entire line item wise balance sheet reconciliation. Then there is a P&L reconciliation for the last year, comparative year, IGAP, Ind AS, adjustments and Ind AS. And they have given the adjustment to statement of cash flow and they have written there were no material difference between the statement of cash flow presented under Ind AS and AS. And then they have given the notes to the reconciliation. And for every difference, they have given the detailed explanation. For example, this current investment. So they have written that under previous GAAP, the investment in treasury bill and government securities were measured at cost or market value, whichever is lower. Under Ind AS, the company has designated these investments at fair value through OCI. Accordingly, these investments are required to be measured at fair value, right? So they have given the explanation so that even if a person is a non-commerce person, is not a chartered accountant, even he would be able to understand these financial statement. And financial statement have been prepared for the user of the financial statement, not for the chartered accountant or CA final student or commerce student. It is for the user of the financial statement, and user of the financial statement could be anyone. Even a sweeper can be the shareholder of any company, right? A sweeper, a rickshaw puller could be a shareholder of a company. But the only thing is, the user of the financial statement is defined in the framework. The user of the financial statement is that person who is having a reasonable knowledge about the financial statement. Reasonable knowledge, not accounting standard. At least you understand profit ये होता है, balance sheet ये होती है, right? Is it clear? I hope you got a comfort, you got some understanding, some clarity, and you must be enjoying the session when you are looking at these big companies' annual reports, right? Yes or no? Are you enjoying the session by looking at this Reliance, HUL, Bharti Infratel example? Yes. Great. So let me come back on my Excel file again. So we have discussed this part, which is your deliverable in first Ind AS financial statement. And I believe you are able to understand this part very clearly. Yeah. Okay. Okay, Kent. Let me go to my PPT once again. Yes. So why the standard first time adoption of Ind AS is there? Because of course there is a difference between AS and Ind AS. Can you guys tell me at least 5 differences between AS and Ind AS? 5 differences. One difference I have told you, the major difference which is between AS to Ind AS on account of fair valuation of investment, right? On account of fair valuation of investment, right? Which is AS 13 versus Ind AS 109 on the measurement part. Can you tell me the another big difference between AS and Ind AS? Any item where there is a big difference between accounting, measurement, etc., between Ind AS and AS? Leases, right? AS 19 versus Ind AS 116, and you know the difference in the leases. From the lessee perspective, right of use asset and leasehold obligation is required, but under AS 19, if it is an operating lease, it is not required. Then biological asset, you remember Ind AS 41, fair value less cost to sell. So no standard versus Ind AS 41, you remember Ind AS 41, right? No standard versus Ind AS 41. Any other difference? Any other difference, friend? Please tell me any other difference. What is the other difference? Revenue recognition. AS 9 versus Ind AS 115. That 5-step model. If a company has sold car along with the service for the next 3 years, in accounting standard, the company was recognizing revenue. Whatever the company has received the consideration, the company was recognizing the revenue upfront. But under Ind AS, there are 2 performance obligations, and the company has to split revenue relating to the car and revenue relating to the services. The revenue relating to the car has to be recognized at a point in time upfront, but the revenue relating to the services is required to be recognized over the period of time as per the provision of Ind AS 115, because these are 2 separate performance obligations, and the revenue has to be recognized on the basis of satisfaction of performance obligation, right? Any other difference? difference in consolidation of JV, joint venture consolidation, proportionate consolidation under AS 27 versus equity method. So AS 27 versus Ind AS 28, right? Any other difference? Any other difference? OC, it's a new component under Ind AS which is not there in accounting standard. OCI, yes, OCI is one of the biggest difference. OCI, no concept versus AS1. There is a concept. Very good. Agricultural standard you talked, Ind AS 11 PP, there is no major difference. PP. Employee benefit, yes. In employee benefit, the actual gain and loss in gratuity defined benefit plan will go to OCI. Yes, higher inflationary standard under Ind AS 29 versus no standard in IGAP, right? Good. You are able to distinguish between AS and Ind AS, and you are able to understand what is the difference between AS and Ind AS on a large part, right? Another one is, if I talk about the long-term obligation, long-term provision, under accounting standard, long-term provision are not required to be discounted off. But under Ind AS, the discounting of long-term provision is required. Under AS, only asset retirement obligation, site restoration obligation is required to be discounted off. So why I am talking about these differences? If these differences would not have been there, probably this Ind AS 101 was not required, right? Probably the transition to Ind AS was not required. The transition to Ind AS standard is required because there is a big impact on transition. And why there is a big impact? Just because of difference in these standard, right? Just because difference in these standard, right? If I talk about a company, you remember I have shown you the balance sheet of Parag Milk and Food Limited. And that balance sheet I have shown you when I taught you Ind AS 41 agriculture related standard, right? When Parag Limited transitioned to Ind AS, because Parag Limited has a lot of cows, and when cow has given birth to a calf, probably there is no cost to the company, and the company has not recognized the value of calf in their balance sheet. But when they did this Ind AS transition for the first time, what they did, they have recognized the fair value of the calf in their balance sheet. So suddenly their reserves have shoot up. The reserves have been increased. How their reserves have been increased? Because the accounting entry was passed, which was biological asset account debit to reserves account, to retained earning account, right? Viraj, investment property versus no AS. As far as accounting standard versus Ind AS is concerned, you are right. There is a separate Ind AS on investment property, but there was no separate standard on in accounting standard on this item. But if you will read AS 13, there was an amendment on 30th March 2016, right? And on that date, via that notification, this concept of investment property was covered in AS 13. So as far as concept is concerned, the concept was almost similar in AS in comparison to Ind AS, right? Koshiki is saying, sir, we are moving from conservatism to actualism. You are right, Koshiki. Bang on. Right? Now we understood why there is a huge amount of difference in AS to Ind AS, why the companies which have done the transition have recorded so much of changes, have recorded so much of movement in their reserves while transitioning from AS to Ind AS, right? Very good. I'm really happy to see the knowledge which you guys are having in this FR subject. So why Ind AS 101? Because there is a difference between AS and Ind AS. Why Ind AS 101? Because this Ind AS 101 provides a procedure for the first time adopter. For the first time adopter, who is a first time adopter? Who is adopting Ind AS for the first time? Who is preparing Ind AS financial statement for the first time? So it provides the procedure. Like, who provide that? What is transition date? Ind AS 101 provides. Who says that this comparative date restatement is required? Blah blah blah. This Ind AS 101 says that, right? Who says that these are the deliverables in Ind AS financial statement? Ind AS 101 says that these are the deliverables in Ind AS financial statements, right? So I have told you that for any GAAP transition, what is the requirement? The requirement is to apply the rules, provisions of new GAAP retrospective from the inception of the transaction. Don't you think it is next to impossible task to go back in time and restate or apply the provisions of new Ind AS right from 60 years back or 40 years back or 50 years back? Do you think it is possible? Infosys, which is 40 years old company, 50 years old company, Reliance, which is 45-year-old company, right? Bharti Airtel, which is 30-year-old company, right? Tata group companies like Tata Motor, Tata Steel, Tata Power, these are 50, 60, 100, 80 years old companies. Do you think it is possible to implement Ind AS from since beginning of the company, since beginning of the incorporation of these companies? Do you think it is possible? I would say it is next to impossible task. If it is next to impossible task, in that case, how this Ind AS transition will happen? For that, Ind AS 101 has given you some mandatory exceptions and optional exemptions, right? For the first time, Ind AS 101 has given some mandatory exceptions and optional exemptions so that one can start from the current date, not from the 40, 30, 50, 70 years ago. Right? Where will the difference go? Ind AS 101 says that the difference will go to the retained earnings, right? Generally. Since, as I told you, that I have bifurcated this entire Ind AS 101 from examination point of view as well as practical life point of view into these 5 complete steps, right? First step is identification of date of transition. This is step 1. Identification of the date of transition. Why this identification of date of transition is important? Because this is the first date, this is the opening date, this is the beginning of the Ind AS transition, Ind AS assignment, Ind AS working, right? And this is the date where all the rules and provisions of Ind AS 101 will be applicable. Okay. Second, step number 2, selection of accounting policies that comply with Ind AS. Step number 2. Right. Now, friends, what does it mean? What does it mean? Right. Let's discuss. So this part, reconciliation part, we have discussed. This deliverables part we have discussed. Now let's discuss the second one, which is selection of accounting policies, right? Selection of accounting policies. So let me take you again to my Excel file and let's discuss the step number 2. Step number 2. Step 2. Selection of accounting policies that comply with Ind AS, right? Continuing with the same example. You are preparing your financial statement for the first time, right? First Ind AS financial statement. And this is your period for which you have to prepare the financial statement, right? Now, friends, I want to ask first question, all of you, that the first Ind AS financial statement, will comprise of how many periods? Will comprise of how many periods? 3 periods. Current year 1920, previous year 1819, and transition date, which is 1st April 18, but largely it is 31st March 18. And these 3 periods are part of one financial statement. So please tell me whether on all these 3 periods in one set of financial statement, can the different accounting policy be used in all these 3 years, or only a single accounting policy is required to be applied consistently in all these 3 years? Tell me. For example, Ind AS 116. Ind AS 116 was notified. Ind AS 116 was notified from 1st April 19. 1st April 19 means effective from 1st April 19, effective from FY 1920. So if I talk about 31st March 18, AS 17 was applicable. Sorry, Ind AS 17 was applicable. Ind AS 17 was applicable on 31st March 18. Right? Ind AS 17 was applicable. If I talk about previous year 18-19, again Ind AS 17 was applicable. Okay. But if I talk about 1920, from 1st April 19, Ind AS 116 was applicable. And you are aware, there is a huge difference between Ind AS 116 and Ind AS 17. There is a huge difference, right? In Ind AS 17, ROU and leasehold obligation was not required for operating leases, but under Ind AS 116, a separate asset and liability creation was required. So my first question is, in this example, can the company apply for the current year Ind AS 116 and for the last period Ind AS 17? First question, can the company apply different accounting policy in the same set of financial statement? If your answer is no, in that case, which Ind AS should be applied in all these 3 periods? Kaushik is saying no, single accounting policy needs to be applied consistently. You are right, Kaushik. So in this real example, it is not a hypothetical example, it is a real life scenario. In this real example, tell me whether Ind AS 116 should be applied or Ind AS 17 should be applied. Yes, Ind AS 116 should be applied in all these 3 years. Ind AS 116 should be applied, right? Friend, in case of in all, please write down, in all the periods of first Ind AS financial statement, single and consistent accounting policy is applied. Now the second question, which standard? The standard says that the latest Ind AS is applicable in all the periods. The first Ind AS financial statement. Latest means the latest applicable on the reporting date. What is the reporting date? 31st March 20 is the reporting date. So on 31st March 20, which standard was applicable? On 31st March 20, Ind AS 116 was applicable, and hence Ind AS 116 is applicable in all these 3 periods of the financial statement. Right? Any doubt here? And you all agree and appreciate to this thing also, right? There is no logic to apply the old Ind AS which has already been scrapped on the date of reporting, right? Because even in the next year you have to apply 116 only. You are not required to apply 17. Then why to apply 17? Just start with the new one, right? And you appreciate that why we are giving comparative. The reason for comparative is to make the financial statement comparable, so that the user, stakeholder, shareholder of the financial statement will analyze the performance, will compare and will look at the financial improvement or how this financial position, financial performance, and cash flow is moving from one period to another, right? So if the different accounting policy will be there, the number will not be comparable. For example, if the company will apply 116 in the current year and 17 in the last year, user will say that, oh, in the current year, there is a huge amount of right of use asset in the balance sheet, right? But in the last year, there was no right of use asset. So the company has done a great job, right? But it is not a great job. It is not a great job by the company. It is a great job by the standard setter, right? This job is by the Ind AS 116, not by company. Right, friends? I hope you have understood this thing. So friends, let's come back to the PPT again. And first Ind AS financial statement should include at least 3 balance sheet, 2 P&L, 2 cash flow, 2 statement of changes in equity and related notes. An entity must use the same accounting policy in its opening Ind AS balance sheet and for all period presented in the first Ind AS financial statements. Apply only the applicable version of accounting standard at the end of the first Ind AS reporting period and not earlier version, means latest. Right? This must comply with the recognition and measurement principle of each Ind AS with limited exceptions and exemptions, right? And it also says that while applying Ind AS for the first time, the company must comply with all the requirements of relevant Indian accounting standard. Only exemption and exception which is given in Ind AS 101, that is allowed for the first time. An entity may apply a new Ind AS that is not yet mandatory if it permits early application. Friends, when you look at IFRS standard, right? When you look at IFRS standard, in all the new IFRS standard, there is a date of applicability, right? For example, this new standard on insurance contract, IFRS 17 was applicable from 1st January 2023. But this standard was notified 1 or 2 years back, right? So when this IFRS 16 came, IFRS 15 came, in all these standards, there was a applicability date, okay? And the applicability date was a future date from the date when these were notified. And in these standards, the prior application was also permitted. For example, if some insurance company wants to adopt this Ind AS, IFRS 17 from 1st January 22, it was allowed, right? Likewise, Ind AS also provides early application, right? So if there is a new Ind AS which has not yet made mandatory, it will be mandatory from some future date. But if the Ind AS provides the voluntary early application, and if the company wants to adopt that early application, the company wants to apply it early, the company can apply early. Again, in that case, all the period of the financial statement, this new standard will be applicable, right? It's not like that we are voluntary applying, so it is applicable only for the current period, not for the comparative and transition date, right? It's not like that. Whatever you are applying, you have to apply for all the periods in the one Ind AS financial statement, right? I hope it is clear. Right? The end of entity A's first Ind AS reporting period is 31st March 2020. This is the reporting year, adoption year. Entity A decide to present comparative information in those financial statements, or not decide, it is mandatory. So means comparative period is 18-19. Therefore, the transition date is 1st April 18. Entity A presented financial statement in accordance with its previous GAAP, which is accounting standard, annually to 31st March each year up to and including 31st March 19, right? So till last year, they have applied AS. Ind AS effective as at which period is required for converting from IGAAP to Ind AS in transition date and comparative balance sheet? Tell me. Ind AS effective at which date? 1st April 18 Ind AS needs to be taken, 31st March 19 Ind AS needs to be taken, or 31st March 20 Ind AS needs needs to be taken for applying it across the first Ind AS financial statement. Kaushik, it is not first April 18. Which Ind AS? I mean, so I am asking, Ind AS applicable on 31st March 20 is applicable to all three period, or Ind AS applicable on 1st April 18 is applicable to all these three periods? See what is written. Latest. Apply only the applicable version of Ind AS at the end of first Ind AS reporting date. What is the first Ind AS reporting date? 31st March 20. Whatever Ind AS is applicable on 31st March 20, these Ind AS will be applied in all these periods of the first Ind AS financial statement, right? Okay. Yes, Sumit, you are right. Entity A, sorry. Entity A is required to apply Ind AS effective period ending on 31st March 2020 in the transition date and the comparative financial statement. Right? Viraj is asking, sir, due to this Ind AS, will any impact on deferred tax asset or liability? Yes. Whatever Ind AS adjustment will be there will be an impact on DT and DTL, right? Every company has taken an impact. And let's discuss this study, this question. While preparing first Ind AS financial statement, an entity may change some of its accounting policies to comply with the requirement of various Ind AS. How should an entity explain these changes in accounting policies in terms of Ind AS 8? Friends, when the company will move from AS to Ind AS, of course, accounting policy will change, right? So you have already read Ind AS 8, and Ind AS 8 says that accounting policy cannot be changed, right? Until and unless it is required by an Ind AS or it provides a better presentation, right? And it also says that whenever you are changing an accounting policies, it has to be taken retrospectively. It has to be impacted retrospectively, right? So when you are moving from AS to Ind AS, whether moving from AS to Ind AS and then you are changing accounting policy, whether it is considered as a change in accounting policies. Tell me whether it is considered as a change in accounting policy as per Ind AS 8. Tell me what is your view. Friend, it is not a change, it is a need. It is not a change. Right? You are applying Ind AS for the first time, and if you are applying Ind AS for the first time, of course, you are required to apply Ind AS accounting policies. How can you apply operating lease policy, which you are applying in AS? When you are preparing Ind AS financial statement, you have to apply this Ind AS 116 lease accounting policy, right? So moving from AS to Ind AS will require change in accounting policy. It will not be considered as a change in policy as per Ind AS 8. It is as per Ind AS 101, right? Have you understood why I am saying not a change? I am saying not a change because if you will say change, sir, ye to change hai. So then if it is a change as per Ind AS 8, then repercussion and implication of Ind AS 8 will arise. But this is not a change. What is meant by change? Change means moving from existing set, right? So we are first time entering into the Ind AS regime. So if we are entering into the Ind AS regime, in that case you have to apply your Ind AS policies as well, right? So changing the policies from AS to Ind AS for the first time will not tantamount as a change in policy as per Ind AS 8. It is a requirement of applying new policy as per Ind AS 101. I hope it is clear to all of you, friends. Rahul, is it clear? Thanks, Ruchika, for such a wonderful feedback. Thank you so much. I'm glad that you are liking this session. Yeah. Okay, let's move on. So friends, in Ind AS 101, just starting from the first time, starting for the first time, some exemption and relaxation are given. Some exemption and relaxations are given, right? So let me, first of all, let me discuss a case study on my Excel file. Then I'll again come back to my PPT, right? Yes. I hope my Excel file is visible. Yes. What I've told you, that for any GAAP transition, I mean to say when you're applying Ind AS for the first time, all the requirement standard needs to be followed, right? The provisions of Ind AS should be applied since the inception of the transaction or from the beginning of the company. This line you understand, na? This line, that the provision of Ind AS should be applied since the inception of the transaction or from the beginning of the company. Let's discuss one example from the Tata Steel. Tata Steel was incorporated in the year 1907. Tata Steel has purchased first building in 1960 for 25 lakhs. Second building in 1965 for 30 lakhs. Third building in 1972 for 30 lakhs. Fourth building in 1980 for 30 lakhs. So Tata Steel has purchased these 4 buildings, right, in these 4 different years: 60, 65, 1972 and 1980. First time Tata Steel has applied Ind AS in the year 1617, right? If the year is 1617, adoption year is 1617, what is the comparative year? 1516 is the comparative year. What is the transition date? Opening of the comparative, which is 1st April 15. In 1985, Tata Steel has revalued its second building. So Tata Steel ने अपनी इस बिल्डिंग को रिवैल्यू कर दिया. Tata Steel has revalued its second building, right? And recognize the revaluation surplus of 20 lakhs. With the help of this example, you will be able to understand the problem. You will be able to understand that what is the meaning of applying the provisions of new GAAP, applying the provision of Ind AS retrospectively since the beginning of that transaction, right? You will be able to understand the problem statement. Then you will be able to understand what is the exemptions, what is the relaxation, what is the breather is given by Ind AS 101, right? Any difficulty, any challenge in understanding this part? Any difficulty in understanding this part so far? No? Very good. I am just telling you a story, right? That what Tata Steel has done till 1985. That's all, right? And I've told you that they have started applying Ind AS from 1617, restated financial 1516, and applying Ind AS for the first time on the transition date, which is 1st April 15, right? So they have Ind AS number from 1st April 15. And we are talking about 1960, 1965, 1972, and 1980. Right? And now we are talking about 1985. Tata Steel has applied Ind AS from the transition date 1st April 2015. What is the general rule of GAAP transition? The general rule of GAAP transition is apply the requirement of new GAAP from the date of transaction, okay, from the date of transaction, which is retrospectively, right? So you have to apply the requirement of Ind AS retrospectively, means since 1960, right? Assuming the first building was purchased in 1960, so you have to apply Ind AS 16 from 1960. So what does it mean? What does it mean? Now let me explain you the provision which were applied, the provision which the company had applied with respect to accounting standard 10 and with respect to Ind AS 16. What is required? This standard AS 10 and AS 6 was talking about your fixed asset accounting, right? And till 31st March 2016, the old AS 10 and AS 6 was applicable. This AS 10 and AS 6 was revised effective from 1st April 2016. I'm talking about accounting standard, right? So prior to the revision in accounting standard, I mean to say till 31st March 2016, AS 10 allows a company that if a company wants to revalue any asset out of a class of asset, if the company wants to cherry pick and the company wants to revalue any single asset, the company is allowed to do that. For example, there are 4 buildings and building is one class of asset, right? Building is one class of asset. And out of this 4 buildings, the company has only revalued second building, which was purchased in 1965. And the company has not revalued the building which was purchased in 1960, 72 and 80. Why? There could be multiple reasons. One of the reasons which we could anticipate is probably the building which was there in 60, 72 and 80 was not having a good fair value. Probably it was the fair value was may gone down. Probably the building which was 1965 must have a good value. This building could be located in a metro city. But the problem is, we understand what was the provision of AS 10 in those days, right? But what is the provision of Ind AS 16 today? The provision of Ind AS 16 today is, if you are revaluing any asset, cherry pick choice is not there. You have to revalue all the asset in that particular class. What does it mean? If you want to revalue any building, you have to revalue all the building in the building class, right? Means the revaluation has to be done on a class of asset, not on a single item of an asset. Friends, now you tell me. And the rule is, on 1st April 15, you are moving into Ind AS, right? Now you have to apply Ind AS 16 from 1960. Let's assume there was no change in measuring on a cost model. There is no change in depreciation. There is no change in assessing useful life. There is no change in assessing salvage value. But on this revaluation part, of course, there is a big change. And you have to apply this Ind AS 16 from beginning, considering कि पहले से हम शुरू से Ind AS ही लगा रहे हैं, तो मेरे numbers क्या होते? So if you will apply this Ind AS 16 retrospectively, in the year 1985, you are supposed to revalue all these 4 buildings and you have to take the impact in the revaluation reserves. Friends, have you understood the problem statement? Is it possible to go back in time, revalue all these 3 remaining buildings in the year 1985? Then on that revalued amount, you need to charge depreciation from 1985 to 2015. Do you think it is possible? Do you think it is possible? Do you think it is possible? But the rule is rule. And this rule is there in IFRS also. It says that you have to apply the provision of Ind AS 16 from the beginning. This is how your Ind AS 101 will help out, right? So Ind AS 101 came as a rescue or breather standard, right? In Ind AS 101, on the transition date, Ind AS 101 has given some exemption or exception, which is relaxation, nothing like that. Ind AS 101 has given an optional exemption. And what is the optional exemption? Ind AS 101 says that if you don't want to apply Ind AS 16 from the beginning, just do the fair valuation on the transition date. And fair valuation on the transition date is a very, very nearest date. It is just 1 or 1.5 years ago. So standard says that you can do the fair valuation on the transition date. Like Reliance Industries Limited had fair valued their land, right? Reliance Industries Limited has recognized a fair value gain of 41,000 crores on 1st April 2015 on the transition date, right? Sir, but fair valuation is not an internal game. Fair valuation requires engaging the valuer and it will take a huge amount of cost. Probably Reliance has spent crores or must be millions while getting the valuation done for their land of Jamnagar refinery plant, right? So it is not possible for everyone. In that case, for the Indian scenario, Ind AS 101 has given another option. What is another option? If you don't want to do the fair valuation, Ind AS 101 says that whatever carrying value was there as per the previous GAAP, carrying value means gross value minus accumulated depreciation. Whatever carrying value was there as per the previous GAAP means as on 31st March 2015, whatever is the carrying value as per accounting standard, you can assume that opening value as per Ind AS, right? So whatever carrying value as per IGAP was there, you can consider that as per Ind AS, opening value as per Ind AS, right? See, your life become very simple. So 101 says that IGAP के अंदर AS 10 के अंदर जो भी आपका क्लोजिंग वैल्यू थी आप उसको ट्रांजिशन डेट पे ओपनिंग वैल्यू मान लीजिए. It will become your opening cost under Ind AS and apply the provision of Ind AS from the transition date. So friends, in this case study, the problem statement which I have given you, which is real life problem, in the solution which is given by Ind AS 101, what is your view? Life becomes simple or not? The most complex situation becomes the very simplest situation, right? Just by an exemption given by Ind AS 101, right? Is it clear? Have you understood this or you have not understood this? Please let me know. So this is why the exemption and exceptions have been given under Ind AS 101. Okay. Now we were discussing that on account of change from, I mean to say transition from AS to Ind AS, if there is a change in policy, of course, yes, there is a change in policy, and it's not a change in policy. It is adoption of new policies, right? It is not a change as per Ind AS 8. It is a requirement as per Ind AS 101. Now you need to tell me the answer of this case study. X Limited was using cost model for its property, plant and equipment, which is tangible fixed asset, till 31st March 2019 under previous GAAP. So 1819 was the year when they have applied previous GAAP. So 1920 is the current year, 1819 is the comparative year, 1st April 18 is the transition date. On 1st April 18, that is the date of transition, it used fair values as the deemed cost in respect of its property, plant and equipment, whether it will amount to a change in accounting policy. So why I'm saying so, I have given you an example of Reliance, right? So Reliance was using cost model, but when they did this Ind AS transition, they have done the fair valuation on the date of transition, right? So can we say that this fair valuation is a change in policy? And if you are saying a change in a policy, so we have to apply this policy consistently in every year. And in that case, we have to do the fair valuation and revaluation every year. Have you understood what I'm trying to say? So friends, whatever the companies are doing on the date of transition, it will not become a change in policy which needs to be applied consistently, right? It will become an adoption of a new policy, right? Is it clear? Is it clear? So in this case, when this company was using cost model and the company has decided to fair value, right, and considering this as a deemed cost, opening cost under Ind AS, this is not considered as a change in policy, right? Use of fair value on the date of transition will not amount to as a change in policy. The fair value of the property, plant and equipment on the date of transition will be considered as deemed cost without being considered as a change in policy, right? Right? It is not considered as a opting a revaluation model. But what happens if on the comparative date, so on transition date, the company has applied this fair value provision for identifying the deemed cost, opening balance, right? Under Ind AS. But afterwards, if again the company will do the fair valuation, in that case, it will become a change in policy and it has to be applied consistently, right? Right? Okay. Now, let's discuss one of the very important criteria here. So we discussed transition date concept, comparative date concept, reporting year, adoption year concept, right? We discussed regarding accounting policies. We discussed a little part of exemption and exception, which is given by 101 on the transition date, right? Now we are discussing when you are preparing your Ind AS account, when you are preparing Ind AS account. So Koshiki is saying 101 exemption carrying value will we consider revaluation of second building. So Koshiki, in that case, you are not required to consider that revaluation. So whatever value, after revaluation, whatever value is coming in the balance sheet, as per accounting standard, you have to take that value as a opening value, right? In that case, you are not required to look at is it revalued, is it cost? You are not required to look at that, right? Whatever value is there, it will become your opening value, right? Clear? The carrying value as per the previous GAAP will become the opening value as per Ind AS on the date of transition. If the transition date is 1st April 18, the value on 31st March 18 as per GAAP financial statement will become the opening value of property, plant and equipment on the transition date as per Ind AS. If you are opting for, it is an optional exemption. If you don't want to opt, it is not required. If you want to opt, you can opt, right? Yes. Now, friends, let's talk about preparation of opening Ind AS balance sheet, right? Now, you tell me one thing, right? When you are preparing Ind AS balance sheet on the transition date, whether you will apply the recognition, measurement, reclassification, derecognition. So whether you will apply all the fundamental of accounting as per old accounting standard or as per new Ind AS, you have to prepare opening Ind AS balance sheet. You have to prepare opening Ind AS balance sheet means converting the numbers, IGAP number on the transition date to Ind AS opening numbers, right? जब तक आप Ind AS के ओपनिंग नंबर्स कन्वर्ट नहीं करोगे, जब तक ओपनिंग बैलेंसेस को हम Ind AS में कन्वर्ट नहीं करेंगे, कंपैरेटिव पीरियड के फाइनेंशियल स्टेटमेंट कैसे बनाएंगे, करंट ईयर के फाइनेंशियल स्टेटमेंट कैसे बनाएंगे, राइट? सो इफ यू आर प्रिपेयरिंग opening Ind AS balance sheet, in that case all the fundamentals of accounting needs to be applied as per old GAAP or new GAAP. Of course it will be as per new GAAP, as simple as that. And let me take an example here. Standard says that while preparing Ind AS balance sheet, you have to recognize all assets and liabilities which needs to be recognized as per Ind AS. And I'll take a classic example here. Soham is a chartered accountant. Soham got an assignment, right? for Ind AS conversion, and it was a big company. So when Soham went to the client, the manager told Soham that, sir, let me take you to our plants and our plots, which was there on the highways, right? Our land, our plot. Okay. Soham said, okay. When Soham reached to some plot of land and the plant or factory's plots, he saw that there was some cows who were there on the plot of land. Soham asked, sir, whom these cows belongs to? So the manager said, Soham sir, these cows belongs to us only, right? These are our cows. Then Soham responded, sir, I haven't seen this biological asset in your IGAP balance sheet. So the manager responded, sir, where was the requirement for, these biological asset, I would say, basically these biological assets, basically these cows are, earlier there were cows and cows have given birth to a calf, right? So the original cows got died and now these calves become a cows, right? So we don't have incurred any cost for these calves which become cow now, and that is why it was not there in the balance sheet, since we haven't incurred any cost. Are you getting me? So Soham said, okay. But he told the manager, see, now we are preparing Ind AS balance sheet. So on the date of transition, whatever cows you are having, get the fair valuation done for these cows, right? Go to the market, go to the cattle market, right, where these cows are being traded. So get the fair valuation done for these cows, or you can also estimate your value in use of these cows. You can also estimate the fair value on the basis of discounted cash flows. For example, if a cow is giving a milk, 50-liter milk on a daily basis, right? And you are assuming that the lifespan of a cow is 10 years, right? So in the 10 years, you will get 50 kg milk every day. And let's say the price of the milk is 60 rupees. And apply the discount rate. It will give you the value of the cow on the transition date. Or go to the market and get the fair value. So manager said, oh, understood, sir. But why you are asking for this? Soham said, in IGAP, I agree with you that there was no accounting standard which talks about the recognition of biological asset where the company has even not incurred the cost. And that is why you guys have not recorded that. But in Ind AS, there is an Ind AS 41 which says that biological asset has to be recognized on the basis of fair value less cost to sale. Right? Then accountant asked, sir, what entry you will pass? Then Soham replied, on the transition date, we will debit biological asset, we will credit retained earnings, right? For example, 100 rupees the fair value. So debit biological asset by 100 rupees, credit retained earning by 100 rupees. And since you have recognized an asset, right? So there will be a difference between the tax base and book base, because the tax will not recognize such asset. So you will recognize a deferred tax liability also, right? For example, tax rate is 30%. What will be the deferred tax liability entry? Retained earning debit 30 rupees to deferred tax liability 30 rupees, right? So recognize all assets and liabilities required to be recognized by Ind AS, right? So what was the accounting entry I told you? Biological asset debit 100 rupees to retained earnings 100 rupees, right? To retained earning 100 rupees. Second entry, retained earning debit 30 rupees to deferred tax liability 30 rupees. So net impact in the retained earning will go to 70 rupees. And liability will create by 30 rupees, asset will create by 100 rupees. I hope it is clear to all of you. Is it clear? You are the auditor. Is it clear to you? Or even you are not clear? So Rahul has responded very beautifully, and Rahul has written that while preparing the transition date balance sheet, we have to apply all the provisions of Ind AS, considering, of course, this is a Ind AS balance sheet. So all the recognition, derecognition, measurement, everything should be as per Ind AS. Very good. Yeah. Soham, are you clear? I'm worried about you. Okay. Yeah. Let's move on. Recognize all assets and liabilities required to be recognized by Ind AS. Derecognize all assets and liabilities not permitted by Ind AS. Friends, when this Ind AS came in India, all these first phase companies like Bharti Airtel, like Reliance, like Adani, Tata, L&T, Nestle, ITC, all these companies have derecognized dividend on the date of transition. Why? Because under IGAP, dividend was treated as an adjusting event under old accounting standard. But under Ind AS, the dividend is treated as a non-adjusting event where disclosure is only required. Now AS4 is aligned with Ind AS. I am talking about up to 31st March 2016. So if any asset which is there in the IGAP balance sheet, but it is not required as per Ind AS, it has to be derecognized on the transition date. Classify all item in accordance with Ind AS. Right. For example, if you have recorded some item, you have classified some item as a different nature of item, but under Ind AS it should be a different nature. It has to be reclassified in Ind AS financial statement. For example, preference share capital. Friends, tell me, preference share capital is a capital or liability under IGAP? Whether preference share capital is a capital or liability under IGAP? What is that? It is capital or liability under IGAP. It is a capital under IGAP. It is a capital under IGAP, right? But what about Ind AS? Because redeemable preference share capital is generally redeemable, right? So I'm talking about redeemable preference share capital. It is liability. Under IGAP, it's capital. Under Ind AS, it is liability. So in that case, friends, in that case, it has to be reclassified in your Ind AS financial statements, right? Measure all assets and liabilities in accordance with Ind AS. We talked about recognition. So recognize recognize as per Ind AS, derecognize as per Ind AS, classify as per Ind AS, measure as per Ind AS on the date of transition. So measure all assets and liabilities in accordance with Ind AS. For example, on 31st March 2018, I am taking example for 31st March 18. Why? Because all the examples I have taken for current year as a 1920. Okay. On 31st March 18, when Viraj is a chartered accountant and he was doing an Ind AS assignment. So Viraj has seen that in the balance sheet of 31st March 18 as per IGAP, the company was having a long-term provision of 50 lakhs rupees, right? Since it was classified as a long-term provision, so Viraj asked from the client, why you have shown this provision as a long-term provision? So clients told Viraj that this provision is required to be payable after 2 years, right? So as per the contract, so of course the present obligation is there, but as per contract, it is not required to be paid immediately. It is required to be paid after 2 years. In that case, Viraj told that if it is required to be paid after 2 years, then why you have not discounted? And the client was also chartered accountant and he was having a good knowledge of accounting standard. He told Viraj, please look at AS 29. So Viraj is expert in AS. Client was expert in AS. So client told Viraj, as per AS 29, long-term provisions are not required to be discounted. Only asset retirement obligation is required to be discounted. And this is not an asset retirement obligation. Viraj said, okay. Now Viraj, it's Viraj's turn now. Viraj told client, okay, But under Ind AS 37, all long-term provision required to be discounted. So if this amount has to be payable after 2 years, you have to discount it on the transition date, right? So for example, the provision was 50 lakh and after discounting, it will be coming out at 40 lakhs. So what you are required to do, you have to put an accounting entry. You have to debit the provision, long-term provision account debit 10 lakh rupees to retained earning 10 lakh rupees. Of course, the deferred tax implication will be there. Retained earning debit by 30% assuming tax rate to deferred tax liability, right? Friends, have you understood this part or you have not understood this part? Yeah. So I have also given an example. Recognize all assets and liabilities whose recognition is required by Ind AS. For example, customer-related intangible asset if an entity elects to restate business combination. Share-based payment transaction with non-employees. Biological assets, right? I have given an example of biological asset. And the other example could be leases also. Right of use asset, ROU and lease liability. Derecognize. What could be the example of derecognize? Dividend is the best example. Reclassify. Item that is recognized in accordance with previous GAAP as one type of asset, liability or equity, but are a different type of asset, liability or equity. For example, redeemable preference share that would have been earlier classified as equity, but now it has to be classified as liability. Non-controlling interest, which would have been earlier classified outside equity, right? Convertible debenture, which would have been shown as liability, but now it could be a compound instrument or a liability, right? Apply Ind AS in measurement of all recognized assets and liabilities. Discounting of long-term provisions. Measurement of deferred income tax, right? So you have to apply the measurement criteria of Ind AS, all the Ind AS, right? I hope it is clear to all of you, friends. Very good. So friends, whether Ind AS 1 provides any exemption from the presentation and disclosure requirement in other Ind AS. So I have told you that Ind AS 101 provides some exemption or relaxations, right? But whether it provides any exemption or relaxation from the presentation and disclosure aspect, answer is no. As far as presentation and disclosure aspect is concerned, it does not provide any relaxation. For example, contingent liability disclosure is required. Segment reporting disclosure is required. Related party disclosure is required. All the schedules of balance sheet and P&L is required, right? So it does not provide any relaxation from the presentation and disclosure aspect. Does an entity need to provide comparative as per Ind AS in its first Ind AS compliant financial statement? Answer is yes. According to Ind AS 101, the company has to give 1 year comparative and the opening of the comparative as well, as far as balance sheet is concerned, right? We discussed this part. Very important part. And now let's take the example of now let's take the example of whom. Let's discuss the example of Kochiki as a chartered accountant, right? Kochiki is a chartered accountant, and while doing an Ind AS assignment, the CFO came to Kochiki and he asked, or he told, Madam, you know, while converting from AS to Ind AS, we have found that, you know, total impact is 100 crores, right? Moving from AS to Ind AS, the total balance sheet impact is 100 crores, right? But madam, there is 30 crore rupees of item where the impact is not on account of moving from AS to Ind AS. The impact was on account of error. So madam, when we are converting AS to Ind AS financial statement, we found that 30 crore of items were not recognized in earlier GAAP. So as per accounting standard, it was required to be recognized, but it was not been recognized, right? 30 crore rupees. So madam, can we do one thing? Instead of saying this is an error, so let's say this is an Ind AS adjustment, right? Let's say this is an Ind AS adjustment, and if we will call it as an error, probably the regulators will before our life, the MCA will before our life, and of course it will not provide a good reputation in terms of in the eyes of stakeholders as well. So let's call it as an Ind AS adjustment and move ahead in the life. Koshiki, can we do that? Can we do that? Ruchika is saying no. You're right, Ruchika. You're right, Koshiki. Standard in IFRS, the standard setter was aware that we are drafting global standard, and in some country, some Gyani Mahapurush will be there who will do all these loopholes from these provisions. And hence, while moving from Ind AS, once you have implemented Ind AS, you have Ind AS 1 and Ind AS 8, which talks about third balance sheet, all these disclosures, right? But what about for the first time? And that is why in Ind AS 101, there is a paragraph 26, which clear cut says that while doing an Ind AS transition, if you will become aware of some errors, you have to call out those errors separately from the Ind AS adjustments, right? So you have to call out this impact is Ind AS adjustments impact, this impact is correction of error impact. So the correction of error is required to be clearly called out at the time of transition to Ind AS. Have you understood? Sir, what about the error which has been found subsequently? For subsequent Ind AS 1 and 8 is there, right? You can refer my video lecture on Ind AS 1 and 8. But for first time, para 24 says that you cannot wash your hands in the flowing water. आप बहती गंगा में हाथ नहीं धो सकते. You cannot wash your hands in the flowing water. You have to call out this is the impact of the error, this is the impact of Ind AS adjustments. And this is logical also, right? Right? Is it clear? Is it clear, friends? Friends, we have completed the first part of this entire Ind AS 101 with a lot of practical examples, right? And in the next session, which is the last session, we will cover exemption and exceptions part, right? Which is not a difficult part. The most logical part we have covered today, right? Soham is asking for even if there is a major impact on reserves, we still have to take impact of fair values. Soham, it is depending on the management, what management wants to do. If you will look at the Bharti Airtel financial statement, there was an impact of 27,500 crore on reserves. They have revalued their subsidiary companies' investments, right? If you will look at the Reliance Industries Limited, they have revalued their fair valued their fixed asset, which is land, and it was having an impact of 41,000 crores, right? So it is depending on the management and auditor. If management wants to do that, auditor cannot stop them, right? Because it is permitted, right? Okay, friends. So it's 10 a.m. now, and I'll wait for another, I would say, let's say 30 seconds. If you don't have any query, any questions, I have answered and responded all the queries which have been asked during the session. If you have any query, I'll wait for another 15 seconds. Otherwise, I'll conclude the session. I hope you have enjoyed the session. You have understood the session. Yes, I'll share this PPT and Excel file as well. I'll share this PPT today only, but Excel file I'll share after this Tuesday session, right? Thank you guys. Take care. Bye-bye.